is. Chat, I agree. Good morning, Faust. I get to hang out with you guys twice today, so I'm filling in for Vlad this morning. Got my normal time this afternoon, so lots of time to talk. Not much to talk about right now. It appears. Let me start my slideshow. Welcome to the Tradespoon live trading room, stocks and options. Opening bell, hump day edition. I am Scott, head trading coach here at Tradespoon, trading for over 20 years, teaching for about 20. And I am known to have slides that change back and forth with different numbers, apparently. Here are the disclosures. Be careful. Manage your risk. We're not advisors. Yada, yada, yada. Let's get into it. Bill said, when I hear your voice in the morning, I think it's Friday. Me too. Love it. I'm not sure where Vlad is, to be honest. Okay, well, let's talk about it. Let's set context. Overall context is, and tell me if you disagree. Right? If you're like, oh, Scott, I'm actually feeling this way. Let's have a dialogue. Let's discuss it. Let's get some opinions in the pot, stirring around, see what we come up with. So here's what I see. I see improved conditions from where I was, and I was in what I would define as at the bullish edge of neutral into slightly bullish territory. Yeah, that's how I would define myself. Now I've moved from that into the bullish end of slightly bullish and firmly in bullish, right? My posture, if anyone is still scoring theirs, is a 4, and it jumped pretty good last week. So what happened? So what does last week bring us? It brought us lots of favorable employment information. We had more job openings. That was a huge job, 400,000 more than we had, and they were 600,000 more than they were expecting. They're expecting it to drop 200. So it's like there's plenty of jobs out there. Both the ADP and Department of Labor had huge positive surprises again. It's like everyone's like, oh, this could wreak havoc, blah blah. We hear a lot of it, but it just keeps on. People are working. Whatever else is going on, people are working. So well, thank you. I appreciate that, Bob. I feel like we've been having the right discussions. How about that? So what I saw was a pop in my long-term analysis. It popped to a new high. I give credit to the buyers and gave it an next-term trend. It pushed a little higher. The volume, preponderance of increased volume on our bullish days relative to our bearish days. They're yanking on the tug of war. Buyers are there. Remember this. We hadn't talked about this for a while. We know that the institutions have a lot of money, right? And it's a lot on the sidelines. So there's powder in the kegs. A year ago, they're like, they have more money than they've had. Well, they clearly weren't just like throwing it in the market a year ago. We were bearish. They were just pulling it out and sitting on it. I would bet that a high, I wonder if there's a statistic, if there's even a way to track this. So every institution has a predefined amount that they're able to sit in cash, right? If you were to look at a prospectus for a mutual fund in your 401k, or if you invest in one, you can pull it up and you can see that they can be no more than 12%, 10%, 15%, somewhere in there. I don't know. Some may be higher than others. Hard to say. But they can't be any more than that amount in cash. So if they get to that point, they can't just they got to put that somewhere, but they can sit on that amount. So I'm wondering, how many do you think are at or near their max? And I bet if you could get this information, it would be amazing, right? So you can see the coffers are full. Everyone's working. That's what we just said. Everyone's working. So there's plenty of people contributing to retirement accounts, IRAs, 401ks, 403bs, 457s, and government, nonprofit, and everyone's all that's contributing, and all that money's going to the institutions every week, like clockwork. One of the things about it is that when unemployment hits, all of a sudden you have people who are losing their jobs, and now they're no longer contributing. That slows the flow of money. Then you have people who get nervous. They're still working, but they're nervous, so they turn their contributions off. It just goes to cash, right? It's going into cash, but it's stable because there's not money coming out yet. But then what? Well, you start to have people who get real nervous and they start pulling money out. And you get people who lost their jobs and they have money in a 401k and that's the only money they have. So they get hit with a 10% penalty, but they pull it out anyways. And in order to pull it out, they pull it out of those funds. And when the institutions don't have money coming in and now they have to answer distribution requests, they have to sell to get the money. And when that selling impacts the market, then people start to see it and they start to pull their money out. They want to sell what they have. And it turns into a little bit of a snowball. But you'll notice it hinges around institutions and it tends to be a pretty slow process. I mean, it's not like now, of course, there's weirdness with a pandemic. Drops, huge in 6 weeks and then recovers it 9 weeks later. It was like the fastest, like everyone just was looking around like, I felt like I was in a cartoon, right? And there's dust all around me and I'm looking around like, what just happened? What the hell? We're all like, was the world shutting down? I mean, you're seeing pictures of major cities with no one. So it was a pretty crazy time, right? So that market was insane, but now it's back to normal. And what is normal right now? None of that is happening. Not even a hint of that is happening. We're still in the mode of everybody's working. Everyone's putting the money in. The institutions already have plenty of money. There's money flowing into the market. That's what we know. They have money to put in. Okay. And we have it flowing the right way. What's leading us right now? Technology, communication services, consumer discretionary. That's my watch list is chock full of those. I had somebody I was working with. They're like, had a trade go wrong. What was it? Pulled it up. Healthcare. I'm like, why are you trading in healthcare? Why? What are we doing over there? This is beautiful over here. Just hang out. Conditions are good. It's sunny. It's nice. We have a barbecue going on over here. We have the where the money's going: technology, communication services, and consumer discretionary. There's no reason to mess with anything else, but you might have to be patient in that, right? The cycles are fairly similar right now. For me, the consolidation is occurring in semiconductors. If you look, that's where we've seen the pullbacks off those highs. We're not trying to get in overbought conditions, waiting for those pullbacks. So that's what I see. What do I see this week? It's tough this week because I just took profits. We just had 6-7 days in a row, which was more than we've seen for a while. That ended, and now it's just sort of lull and pull back a little, and we seem to be overbought and consolidating. So right now it's tough. I have to be patient and really find the signals that I'm looking for. Today's market, let me know if you see it different. Let me know if you want to challenge. And I don't mean like I challenge you. I mean like throw something out that says, well, what about this? The what abouts are crucial. That's why we're here to all talk about our what abouts. Well, what about this? Now you might say, what would cause me to? There's the opening bell. What would cause me to change this? My number one, I call it my tsunami indicator that I look at. Everybody knows this. Comes in is the VIX. The VIX, and it's really funny because right now I'm like, oh, look how much bullish everything is. But for just a minute, we were teetering on I'm like, oh, this hedge is about to come on. I talked about it. It was right there. And then what? Well, obviously we got the news. Debt ceiling averted, crisis averted. But the signal held up. Right, Bob? Bob said it's going to 13. We hit 14. It's like I can't contain my enthusiasm for the first time since the pandemic. 14. which means, oh, 12. I can smell it. Whoa, 12. It smells so nice. It's soft and it's warm and inviting. 12. It's a better market, right? And there's it opens up additional trading strategies. But what does it tell me? It tells me that the institutions have they have less I'm going to put it this way. They have less inclination towards hedging today than any day since the pandemic. And whatever else has happened, whatever, are you not seeing my screen? You should be seeing Yahoo. Are you not seeing that? Let me see. Let me know. Yep. Terrence, okay. Yeah, Yahoo. Everyone else, look around, Terrence. It seems like it's on. Should be on Yahoo Finance. We're just you're just listening to me yap. I'm yapping a little today. I apologize. Let me get off the but it's important. What do we say this week? There's just not. Look at this economic calendar. This is one of the lightest economic calendars. That's next week. So you're like, that doesn't look light. That looks full. It is next week. This week's is here. Monday, we had these minimal reports. Yeah, it's just me yapping. Just me flapping my gums, waxing on about the market. Nothing yesterday. Today, the trade deficit. I don't even see what the number. I mean, it's supposed to widen. Consumer credit is supposed to drop. I don't follow these, to be quite honest with you. I've never seen them move the market, which is why I'm like, I will take a look, obviously, at the jobless claims, but the jobless claims had 1 week where it just peaked its little head above 250. And remember, I'm like, even at 265, that's 275, 280, 1 week, 2 weeks, 3 weeks in a row. Then it's like, okay, now I'm starting to see the earliest signs of concern in the labor market. Until that happens, I'm going to feel pretty comfortable about what's going on. Friday, nothing. And then Monday, nothing. And then it just is like a tidal wave of, inflationary data. I mean, it's funny to me. I wonder with CPI announcing while they're meeting, it's like they're having their coffee and continental breakfasts before they adjourn the meeting, and bam, the CPI numbers come out. It's like, do they already know what they're going to do? Yeah, no, I get it. Bob said Stella caused him to put on a hedge he maybe didn't necessarily need. And that's the hard thing about they know. I think they do too, Mario, but it would be interesting to see. So latest was 65%. I'm in the raise the number camp. That's with the strong employment. Here's what's going to happen. We'll watch the financial sector pretty closely after that. Sorry, I had a little bit of dry mouth. I was yapping too much. I had a little dry mouth. I had to take a coffee. When they put that quarter point, I swear at any given time right now, there are just half a dozen to a couple dozen banks teetering, where it's like one more hike could just be that tipping point, that domino, and then it's just like, brrr. So I think the Fed's a little bit worried about that as well. Fred said he dropped out of the raise camp today. Oh, today's the day where you're like, no, they're going to leave it. I mean, here's the thing. As I look at it, I'm thinking to myself, especially depending on how the verbiage comes. But if they raise it a quarter of a point, they're saying we want it a little higher, and we believe that it's strong enough to handle doing that now. Right? They maybe that could be great for the market, because the market's seeing both strength and then an accommodating Fed. So yeah, I think the only thing that might be a catastrophic Fed decision would be if they did a surprise half a point raise, then that would spook the market. But obviously, nobody thinks that's coming. I don't either. I'm feeling bullish going into this Fed announcement. I'm hoping that we get some signals as this thing lulls for a minute before, and then see what happens. That's just me. That's what I see. Let's look at a couple other things. The model real quick. She agrees, Stella. She's bullish on SPY just like me, and it's like, can we find an opportunity here before this next wave comes? It definitely feels more bullish than we tend to have in summer months. That's for sure. But again, what do you see? Bullish there. Now, this was where it was interesting. I haven't seen this update today, so I'm as interested as you are. Where'd that come from? I don't see anything anywhere in technology. I mean, I guess, okay, so hold on. Let me take that back. I do think if you start looking at chip stocks, they're already turning again. I mean, it's that was the consolidation. It had a bit, but it held. All these held. AMAT, it's holding. It's trying to turn. NVIDIA. I mean, the stochastics is still coming down, but look at that. The sellers have had an opportunity to try to even. They haven't even flirted with the gap. It's like they're scared to go near the gap. They're like, don't go near that. It'll suck you right in. This looks very bullish. Marvell. That's an interesting one today. Even my old friend, Taiwan. Look at that one. Looks like it's trying to turn. Very similar charts, you'll notice. They all gapped. They've all held their gaps. That's these. Not all chip stocks. This is the leader group to me. I think realistically, if you had a preference to any of these, you could look at that. Some might be turning sooner than others. But yeah, for me, this is where the setup is. I'm curious how Stella sees. She's not liking technology. Let's see what she says about chips. We tried this yesterday. Can I do this? Okay. I mean, you can see she's actually still bullish on chips. Not hugely, but it's nice 8% move forecasted. Let's see if I look at some of the individual stocks in here. Whoa, look at that. Whoa, AMD look like Stella doesn't love that at all. Hey, I'm open to, but loves NVIDIA. So there's just enough choppiness in this that it's causing a bit of mixed signals, quite honestly, right? I mean, it's got enough waves both directions that if it just picks up on the wrong thing for a minute, that can happen. Let's see, Taiwan in the bearish camp with AMD. So even Stella agrees NVIDIA is the best. I love NVIDIA. AMAT. I'm actually fine with any of these. They're all going to move pretty much together. AMAT is more in the bullish camp. AMD depends on PC sales. That's true. NVIDIA is so rooted. PLTR and AI. I look. If you look at Intel, it's not up at the new highs. It's like, it's trying to get back there. I mean, it had a bit of momentum like everything else, but it's certainly not up in that leading category. Here's Palantir. Definitely likes that. I mean, and, NVIDIA does serve the AI. Rumor Marvell got ASIC chip design for Amazon. Okay. Yeah, it says neutral. It still looks pretty bullish here. Consolidation, trade out of the consolidation. So yeah. Okay. Let's look at the Dow. Let's look at what time is it? We're okay. We got some time. Dow. How's everybody feeling? I forgot to ask. Do you feel in control? That's the most important thing. If you say no, the next question would be, what are you not in control of? We want to control our risk. We want to control our emotions. We want to control our trades. We want to control our kids. Flailing, a little confused. I get it, man. Right, Mario? I wouldn't mind the weather. But then we think locus of control. What is my locus of control? Meaning, what do I actually have the ability to influence? And right off the bat, boom, kids is off the list. Gone. Can't control the weather. Gone. I can't control my risk. Locus of control. I can try to control my emotions. And that's where that's a constant endeavor of, let's be aware. Let's talk about it. Let's not try to sweep it under the rug. It's better just to, come to terms with what's going on. I can definitely control my trade, my stops, my targets, my scaling strategies. Where am I going to get out? How long do I expect to be in based on current market cycle? Yada, yada. So I just think about that. Dow looks pretty strong, actually. Woo. And here's the thing. So essentially what Stella is projecting is a defensive divergence between the Dow and the NASDAQ. That's one that I actually pay pretty close attention to when I do my weekly major market analysis, where I look at 9 month, 6 month, 3 month, 1 month on a relative strength chart between the Dow, the NASDAQ, the Russell, the S&P. I'm looking at those to see, is there something subtle, a little divergence? Whoop, all of a sudden, the NASDAQ careens up and the Dow down, and it's like, whoa, that's money moving out of defensive into bullish. If I can catch that early, and that happened. That happened back in March, around March 10th or 12th. That's one of the key signals that said I'm leaning more bullish now, coming out of that little corrective cycle the market went into. That's what. Then let's look around at some potential opportunities. I would say slightly bullish. So 3 out of 4 are bullish. The one that's off is the NASDAQ, and that tends to happen with the model. The NASDAQ is the one that if it picks up on if it amplifies the wrong price action, can make it look like it's just going the opposite way. Certainly, I need to pay attention to that. I'm not going to say, I look at tsunami indicators and then look at that and be like, I don't know. That's the leading market projected to drop all of a sudden, and a defensive divergence in the major market analysis. Okay, let's be aware of it. Bob said it got me to hedge. Yeah, I can see why. The VIX had me just like literally a fraction of a hair away from it was that close. So I get if something did. Anyways, okay, let's go forward. Looking for maybe more of a consolidation or a pullback on this projection here. So that wouldn't shock me. But we're already outside of. We're all back, and then in this period, instead of going up a little, go up a lot, and then that makes this consolidation late. And then who knows, right? What I know is we're good. So, okay, is this up and running yet? I don't think I have numbers. Let me reload it. Oh, I do. Okay, Tesla's been doing well. I put it back on my list reluctantly. Yeah, I really would prefer not to be involved in anything. You can see the semiconductors are starting to show some strength. That's where I think we're going to find potential for putting on trades right now. If you're looking to put anything new on, maybe here in software, financial, I'm still on the fence on. I want to trade Microsoft and Apple, maybe Oracle. Just waiting. Energy, consumer defensive. Healthcare, there hasn't been much there. And yeah, the housing did. I saw that. I lost patience, and then they moved, and it's like, pretty flat day. Let's go look at the SPY opening range, see what's going on. Got my copy right in front of my keyboard, and that's like a recipe for disaster. Hold on one second. There we go. Nope. Nope. If I could just get the regular old SPY. There we go. Yeah, up 0.3. The volume you can see, we're seeing here a price moving higher, volume moving lower, divergence, price volume divergence. Makes me think that we tested 429.60 2 days ago. That's about where we are now. So yeah, I think we're overbought, and it looks like it's due for a consolidation. I would love for this to pull back to 420 on easy volume. Definitely looking for a bullish trade coming out of that. Absolutely. This is why I'm bullish. This here last week popping up out of this is what makes this continue to look bullish. We're in a bullish trend. Are we in a bullish buy zone? Well, no, that's down here in these areas, or possibly even here. So we do need to wait for a consolidation. Otherwise, we're chasing into 8 days worth of bullishness, and that's the most we've seen in 6 months. I don't want to buy only to then have it consolidate. I'm going to be patient. Have a couple of bullish things left. It's half a bullish trades because I've already taken some profit. I would imagine you guys have some bullish trades on right now. I'm managing those. Am I scrambling to buy puts? No. We're at a higher high. Let's look at the VIX. If you got a hedge signal, like Bob did, you would. And he said, now here's the thing. He said they're 6 months out. What else do we know? They're cheap right now. Well, it's never a bad time. But here you can see, we touched into 13. It's like a parent proud of his child. I'm so proud of you, VIX. You've worked so hard. You earned this. Down to 13.9. I mean, look, it definitely looks like it's slowing down and is is likely to turn up. But imagine if we turn up and it only gets to 16. It's like all of a sudden, find 16 is the downside, and then we want to be bullish in this kind of market. That's the facts. This comes up here, even if it gets up here, anywhere in this zone, right? All of this, that's my last high. That's where I was like, oh shit, time to hedge. It was knocking. If it had done this, which it would have done if the news was bad, then I would have a hedge on as well, because my concern at that point would be we are going to go into one of these escalation modes, right? Those are the ones that we're always like, well, let's be careful with that. So it was knocking, and then the good news turned this thing around, and it's what a difference a couple of days can make on a posture, without a doubt. So what do we see? We see institutions have really shed. It was not high back here at 20. I mean, it was at its high for this period of time, but it has shed so much. So now prices are much cheaper. Yeah, at this point, I definitely. And so if someone's like, hey, if I bought puts here, would you disagree with that? No. If you're hedging something, especially, yeah, look, they're cheap. That's the cheapest they've been in 3 years, 3.5. Amazing. Okay. So happy. Let's look at some stocks here real quickly. Calendar spreads. I've missed you so much. It's got a weird noise on my computer. What the hell is that? I just saw your comment earlier, Mario. Okay, let me get to the top of this list. That was good. Bulls. Yeah, you can see that whatever minimal interest there was in materials, prices are down, which is good for inflation. There's not a lot of interest there. Great. Okay, here's the question. Was that it? Was that the consolidation on Apple? Because that happens sometimes. Was that it? Because the stochastics is still coming down. Time to get a new laptop with an AMD processor. They're cheap now. The stochastics is coming down, but look at this. It's like a flaggy looking pattern. Is flaggy an adjective? I want it to be. Are we breaking out of that? I mean, you can wait one more day to see if this turns and maybe like put a buy stop entry above this. If you wanted more confirmation, you could look at this and say, I do think that's it, Scott, because sometimes this thing does these little, I've consolidated and then pops. Back here, you can see like sometimes it's just these minimal pullbacks. And at the end of it, you're like, oh my gosh, look at that. So Apple's on my lists. I have to kind of decide how would I go about that. But looks strong. I like being bullish on strong stocks. AI, yeah. I mean, this is turned, but it's all, I don't know. I don't love shark frenzy looking stocks. I put it on there just to watch it. Amazon's overbought, needs a consolidation. Be patient. Okay, so I've said I'm looking for one other sector. And this has been sideways for a while, and then all of a sudden, bing, a little bit of a higher high. And now it looks like this could be coming down, and depending on how this moves, possibly going higher or low. Where is this? Industrials. I said I hope either financials or industrials. Are joining the fray. And that's what it would look like. So I would say that Boeing is actually on my list. BLDRs overextended unless you got in and you're managing. This would be one you're managing. And look at this. It's telling you, right? It's off its high. If you survived this, then you've gotten this, and it's about time to reap the benefit. Move on. Don't be greedy. COP, nothing there. Costco, waiting for the consolidation. DBC, materials, energy, rather. Nothing there. Here's the Dow. I mean, you can see that the Dow has broken, but everything's broken. It's popped up. But if all of a sudden the Dow does this and the NASDAQ starts doing this, that's concerning to us. That's what we're paying attention to. FCX looks pretty bullish. If I'm going to do one, this broke out. Now I'm looking for this consolidation. If I will do it, it's going to be in there, not at this high. That's for sure. That's for sure. FedEx. There's nothing there yet. I don't even know why we're still watching it. It's just been kind of meandering for a while now. China's in a bear market. I knew there was a reason I didn't want to trade in China stocks. It's in a bear market. GE looks strong. It's a bit of a grinder. It's hard to get signal sometimes. I'd definitely wait. You're more overbought than not. Waiting for it to get down. Gold, nothing really there. Google looks good, but it's overbought. I would want to see a little more consolidation. Oh, look at the small caps. What does it mean if the Dow goes up and the NASDAQ goes down? What does that mean? It means that money's flowing into the Dow, which is large cap safe stocks, and out of the NASDAQ, which is more aggressive technology stocks. So it means that people are losing their appetite for risk, and they're saying, oh, let me get out. We could see it go trend for 3 or 4 months. Let's be ready. McDonald's does not look good. Meta looks good, but not now. Need a little consolidation. For me right now, chip stocks, they're off their highs. We got to watch these because they're volatile right now. So be careful. They're a bit of a shark frenzy, the chips right now. This whole AI craze has turned them into a bit of a shark frenzy. So be a little bit more careful there. Microsoft, just come on to me, Microsoft. You tricked me a little bit. Shame on me. I only picked up a little piece when that thing made basically the move I was looking for. It just took a little longer. I got shook out. I'm sure some of us did. If you're not sure what I'm talking about, it's right there. That was the loss percentage. It was a multiple candle divergence from the move that I had forecasted. And if you look, it broke below the Heiken Ashi. I believe it did. Let's go back and look, actually. I believe it. Yes, that was what happened. Heiken Ashi transition candle and took me out. So it wasn't a percentage, but it was a management technique using a Heiken Ashi, which immediately reversed. You don't see that very often, right? Sometimes they may turn like a little red and then keep going, but not break. But when they break, they're done, typically. So, what are you going to do? Sometimes you eat the bear, and sometimes the bear eats you. QQQ. Overextended. Silver. Oh, interesting. Semiconductors. Looks like it's trying to turn. That looks interesting. SPY looks overbought. UNG. I don't know why I keep watching it. I feel like I'm going to make this amazing genius call of the bottom of the natural gas market right before it goes up 150%. So just stay tuned. We'll see if I can make that. I'm going to add that to my resume. So I'm watching. You might wonder, are you doing anything else besides just looking at the chart once a day? No, that's it. That's all I'm doing. Don't judge my techniques. The VIX is still positive, looks good. So I think financials. So I said industrials, they're kind of popping, but I also feel like financials have popped out of their consolidation. Whoever pulls back better, or maybe it's both. I mean, look at that. What if we had both of them and we just had this amazing bull market? And everyone's like, is it going to be a soft landing And I told you the recession was last year. That's how I see it. Last year, Q1, Q2, we had a bear market. What's the Oh, we all think something else bad is going to happen. Well, why? We seem to be supply chain issues mostly seem to be addressed now. You don't. I mean, yeah, there's still issues with COVID, but nothing that shuts anything down. We seem acclimated to this European war. Hopefully, that comes to some kind of resolution sometime in the near future. But I don't know. The economy's churning. I feel okay. Let's finish off with the ETFs. So there's industrials trying to pop a little bit. There's staples, still looks defensive. There's utilities, still looks defensive. There's consumer discretionary that looks very strong, accelerating its trend, but we can't buy at the top of the trend. We can't buy at the end of a 7 or 8 day move. So now what? Now we're waiting for it to go ahead and pull back. Okay, so yeah, I mean, look, here's your decisions. Do you trade into the chip sector now? That's about all I see that's setting up. Take your pick if you decide it. Build that trade. We'll look at those this afternoon. We'll reevaluate. We'll see if there's any actual trades this afternoon that develop. I still want to see towards the end of the day. This whole week has me a little suspicious. All right. Well, listen, it's good to see everybody. It's always nice to get an extra morning coffee session together, talk it out, So, all right. Well, listen, enjoy lunch. I'll see you in about, 5 hours? I'll see you in about 5 hours. Happy trading.